AS2 deals with inventory. What are inventories? Inventories are broadly a raw material, work in process and finished products. Finished products are those which are held for sale in the ordinary course of business. Work in process are in the process of production for sale, and raw material and other supplies which will be used in the production for the sale of goods and services, right? So this is what is inventory. Now when we talk about accounting standard 2 inventory valuation, we need to remember few fundamental principles. The first principle is inventories are valued at lower of cost and net realizable value. What is cost? Cost is your cost of purchase plus taxes which are not refundable, minus discount plus transportation, all the costs which are incurred to bring the inventory to its current location and condition that are included. What is net realizable value? Net realizable value is estimated selling price minus estimated cost of completion and sale. So lower of these two you will consider to value inventory. As far as cost is concerned, you can follow FIFO method, you can follow weighted average method, you can follow specific identification method, you can follow retail method. Multiple methods have been given. Now when it comes to valuation of inventory, this golden principle is what you need to remember. And for valuation of raw material, what the standard says is raw material are normally valued at cost. So normally you will value them at cost unless the finished goods in which they will be incorporated would be sold at below cost. So if the finished goods will be sold below cost, then raw material will be valued at their NRV, which is given by replacement cost. A lot of students have this confusion that raw material should be valued at lower of cost or replacement cost. No. Raw material should be valued at cost. It should be written down below cost, or the value should be brought down below cost only if the finished goods in which they would be incorporated would be sold below cost. Okay, in that case, you will write it down to below cost. Sir, if replacement cost is higher, can we show it at a higher value? You cannot show it. Above cost inventory valuation is not permitted. So for finished goods, lower of cost or net realizable value. For raw material, what you need to do is at cost, but if the finished goods should be sold at below cost, then you will use the replacement cost.